Welcome to the October 7th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. As always, we're going to run through a few charts of major averages, and then open positions in the model portfolio, and finally we'll take a look at what's out there in terms of new setups. So as of Thursday's close, our timing model remains on a sell signal, and we're currently looking at day 3 of a rally attempt in the books and the NASDAQ composite. So tomorrow, Friday, would be the earliest that we could see a follow-through day, though we don't necessarily need a follow-through day to go long. If the price action can get back above the 20-day EMA and hold, that would be enough to put the model in buy mode. So the NASDAQ gapped higher, rallied into resistance of the declining 20 EMA and possibly this downtrend line here. Closed well off the highs of the session. That's a bearish reversal candle. So in the short term, what we're looking at is probably a best case scenario would be for the price action to open above Thursday's close and to hold that level all day on Friday, and then attempt to hold above the 10-day EMA over the next few days. If not, then we're looking for a close of this gap and then a bounce. If not, then we're looking at a possible retest of the prior low. And there's also a possible scenario of the price holding Thursday's close and then maybe even pushing higher through Thursday's high. In the S&P, again, stalling action into resistance, and we're looking at these same scenarios potentially in play. Positive, the price action can hold above Thursday's close in this 20-day EMA. If not, then we might see a test of the 10 with a gap fill. And if that can't hold, then we'll look for a retest of the prior lows. Note that the S&P did close above the 20-day EMA. As far as open positions in the model portfolio, we have one quarter position in Dokken, which had 1 and 2 reversals off the 20-day EMA. We sent out an alert to purchase around 83.60, and it closed in the money with a 2% gain. We'll look to add either on strength, possibly on a move through the prior high, or on a pullback to the rising 10-day EMA. As for potential new setups, given that market conditions are not yet ideal, one should try to limit long exposure until there's more evidence. So taking on 1 to 2 positions or possibly even 3 to 4 with reduced size is fine. But the main thing here is to avoid getting too heavily invested before we have a clear buy signal in place. As far as stocks to keep on a watch list, we have DDOG, and I'm going to run through a few pretty quick here. DDOG, especially if it holds above 140, if it can push back through this 145 area. Team is on a watch list. If it pulls back a bit and can push back through this 400 area, something to keep an eye on. BILL could be in play if it can push back through this 280 area, looking for the 10 and 20 day to hold up. 10 and 20 have pinched together. And note that the price has also bounced off the 10-week MA, but is yet to touch the 50-day MA. EVRI is a false breakout, but should be monitored in case it can re-break out above this 26 area. Snow is interesting in that it's yet to form a base since breaking its downtrend line and is currently in week 1, 2, 3 of its base. If it can hold out for another 2 weeks, it will be a flat base pattern, as this is less than a 15% pullback off the highs. But if market conditions heat up, it might be tough for snow to stay down, so it could be one of these stocks that breaks out after 3 to 4 weeks of chop. SIG, tight inside day at the highs. Look for a move above the 3-day high. Trigger a buy entry. And the last chart of the night is Netflix, which broke out on heavy volume to all-time new highs on Tuesday and consolidated on Wednesday and pulled back on Thursday. Did pull back to the 20-period EMA on the hourly. The hourly chart will often provide support on a strong breakout. All right, that's a wrap for tonight's video. Thanks for joining me. We'll see you again next week.